Have you ever entered a trade with full confidence because the trend looked so clear and just a few minutes later your account started bleeding red? Not because you lacked knowledge, but because there are moments when the clearest trend is actually the most dangerous trap. I remember it very clearly. There was a time when I sat in front of the screen watching gold surge straight up right after US inflation data came in higher than expected. The forums exploded, chat groups got loud, friends of mine were firing orders non-stop. No analysis, no real reason, just one shared belief: price would keep going higher. And in that moment, I was the only one placing a sell order. They said I was crazy. They laughed. They called me a contrarian. An hour later, price flipped and dropped straight down. My trade turned green. They were left stuck in accounts burning red. I'm not telling this story to show off. I'm telling it so you understand one thing. I used to be part of that very crowd. I chased the news. I bought the top. I sold the bottom. And I paid for it with very expensive lessons from the market. Until one moment when everything began to change. That was when I asked myself, why do I always lose whenever I do exactly what everyone else does? And then I realized something deeply uncomfortable. In this market, the most obvious thing is often the most dangerous trap. The clearer the trend, the sweeter the trap, and the crowd always arrives late. There was another time. I was sitting in a familiar cafe, watching the chart, listening to people talk about Bitcoin's can't-fail breakout. Everyone said price would go much higher, 100,000, 200,000. I stayed silent, because I knew what they believed in wasn't analysis, it was emotion. They didn't see the distribution pattern repeating itself. They didn't notice that price was still rising, but volume was fading. Good news came out, but price no longer reacted the same. I placed a sell. A few days later, the market bled. And once again, I didn't just make money. I gained something even clearer. Those who go against the flow, if they stay calm enough, will see things the crowd never sees. I'm not saying you should always fight the trend. I'm not saying trading with the trend is wrong. But I do believe there are moments when the trend itself is the trap. Have you noticed? Whenever the market runs hard in one direction, people rush in and call it a trend. Yet it's often when everything feels too obvious that reversals appear. I've survived through markets that turned on a dime like that, and I've realized this: trend following is the game of the majority. Counter-trend trading is the art of the few. It's not for the impatient, not for those who need constant action. It demands counterintuitive thinking, the patience to observe, and above all, the courage to wait for the right moment. I'm sharing this not to encourage you to fight the market, but so you know this: there is another path. Few walk it. It's quiet. It's not easy. But those with enough patience and enough inner strength to step into it will see a very different market. I chose that path, the path that doesn't run with the crowd. And today, I'm sharing again what I've learned, what I've lost, and what I've earned. For you, if you're also looking to make money without chasing the majority. Before we go any further, let me ask you one simple thing. If what I'm saying touches something you've lived through, subscribe to the channel so you don't miss what comes next. And now, let me ask you another question. Have you ever placed a trade against the trend and right after that started doubting yourself? If you have, stay. The mindset of those who swim upstream has never looked normal. There's a truth most traders refuse to accept, not because they're unintelligent, but because they're too similar. You see a strong bullish candle after good news, you think price will keep rising. You see RSI above 70, you think the market is overbought. You see the moving averages sloping up, you believe in the trend, and you forget one crucial thing. The market does not follow tools, tools follow the market. Those who go against the flow don't analyze that way. They don't chase indicators. They observe emotion. They don't look at patterns to enter trades. They ask a different question. How many people believe in this pattern, and when will that belief collapse? Their thinking runs against instinct. When everyone feels excited, they begin to doubt. When everyone feels afraid, they begin to observe. When the crowd chases price, they sell quietly. When the market feels like it cannot fall, they calmly prepare short positions. Not because they oppose the trend, but because they see what most people never look at. I once had a friend, also a counter-trend trader. He told me something I've never forgotten. I don't need to be right often. I just need to be right when everyone else is wrong. It sounds simple, but that is the essence of the game. Being right when the market is obvious, anyone can do that. But being right when everyone is lost, that's when the biggest profits are made. That mindset demands something rare: independent psychology. You cannot beat the market if your mind is still pulled by other people's approval. You cannot trade against the trend if you're afraid of being called stubborn. You cannot escape losses if you still believe the majority is always right. The trading masters I've learned from and observed all share one thing: they speak less. They enter trades while others are still analyzing, and they exit just as the crowd starts rushing in. I once asked one of them, "How can you trade against the trend with that much confidence?" He smiled and said quietly, "I don't look at the trend, I look at the reaction. When good news comes out and price doesn't rise, that's the real signal. When price rises but volume weakens, that's a warning. And when everyone is staring in one direction, I know the big fish are getting ready to swim the other way." It may sound vague, but in reality, it's simple. The market doesn't pay those who are right. It pays those who are right at the right time and brave enough to go against the flow when it matters. You don't need to be smarter than others. You only need to be calmer than the crowd at the most critical moments.
You only need to understand 3 things: when the crowd starts to lose control, when the market reacts against expectations, and when clarity itself becomes the trap. You can study technical analysis for years. You can load every indicator, read every piece of news, watch endless videos. But if you don't change the way you see the market, you will still be part of the crowd, always arriving late and always exiting in fear. Going against the flow is not about proving you're smarter. Going against the flow is about standing in the only place where you can see the real picture. And sometimes, that truth is not on the chart at all. When you first enter the market, what's the first thing people teach you? Trend is your friend. Trade with the trend, it's safer. It sounds reasonable, and because it sounds reasonable, everyone believes it. I believed it too. I drew trend lines, pulled Fibonacci levels, waited for pullbacks, bought the upswings, sold the downswings. I won, and then I lost badly. That's when I realized something important. What destroys traders is not a lack of knowledge, it's half the truth. Trend is your friend is only true for a period of time, until it isn't. And the problem is, no one tells you when that moment arrives. You trade with the trend, price keeps rising, you add more buys. The trend still looks strong, you increase position size. Good news comes out, price stops rising. You hold. The first candle appears. You tell yourself, just a small pullback. The second candle, the third. You start to shake. Then the trend flips, and your account evaporates in minutes. I call that betrayal by a fake friend. You see, what we call a trend is really just a trace of past behavior. It guarantees nothing about the future. And the market has never operated on things that are easy to predict. Ask yourself one question. Who creates the trend? Who pushes price up to attract attention? And who is the first to distribute right after you enter your trade?
The trend can be your friend, but it can also be the best friend of the whales, and you're being used without even realizing it. Over the years, I've seen countless traders blow up their accounts, not because they were stupid, but because they trusted too deeply in one sentence repeated over and over like a mantra. They forgot that the market doesn't run on textbooks. It runs on greed, fear, and surprise. There's a bitter paradox in the market. The clearer the trend, the greater the risk. What feels most obvious is often the easiest to betray you. If you've never been betrayed by a trend, you're probably still new. But if you've lived through it, you understand. The traders who survive the longest are not the ones who catch trends best. They're the ones who know how to question them. Counter-trend trading is not an emotional game, and it is not reckless gambling. It is a form of disciplined assassination. Quiet, unnoticed, precise. When I trade against the trend, I don't expect the market to reverse immediately. I don't enter because price is too high or too low. I enter only when the market shows me something abnormal.
And that is where the real story begins. I don't chase trends. I observe reactions. I look for what most people don't see, the misalignment between expectation and reality. Let me give you an example. US CPI comes out better than expected. Most people assume the dollar will rise, gold will fall. The market reacts correctly for the first 30 seconds. Then the dollar stalls, gold stops falling. Short positions are already crowded, spreads start to widen, volume increases, but price goes nowhere. That's when I take the opposite trade. Good news with no upside is a sign of saturation. Bad news with no downside is a sign of a bottom. The whales entered weeks before you did. Now it's time for them to exit. You arrive late. You become their liquidity. I see that, and I trade against it. My counter-trend strategy is always built on 3 elements. First, expectation mismatch. The market reacts incorrectly to the news. Second, signs of exhaustion. Price no longer responds strongly. Ranges tighten. Momentum fades. Third, the point of disappointment. That final moment when late entrants start to feel something's wrong. That's when I enter. Not early, not late, and always with very tight stop losses. I don't need to be right often. I only need to be right once, right when everyone else is wrong. I've traded against the trend while the market was surging hard. I shorted gold when everyone was shouting, "Go to the moon." I went long the dollar when everyone believed the Fed would pivot. I only need one signal, the betrayal of expectation. Remember this principle. When the market doesn't react properly to news, there's always a bigger hand behind it. The crowd doesn't see it, but I do. And I'm not afraid to bet the other way. You might ask, how do you manage risk when trading against the trend? I'll answer directly. Risk management in counter-trend trading must be 3 times stricter than trading with the trend. No hope, no praying. You must accept that the trade can be wrong, and you must exit immediately if there's no follow-through. No averaging down, no holding because of feelings. Counter-trend trading is a game of precision, not stubbornness. I only enter when there is a clear setup, there are concrete signs of weakness, there is strong, noisy news, and market psychology is at an extreme. There was a time I shorted the dollar right after an extremely strong non-farm payroll. Everyone was long USD. Spreads widened, volume surged, the dollar index popped, then froze. 5 minutes later, the price collapsed. The reason was simple. The Fed had already signaled beforehand. The good news was just excess information. I made a big win. Not because I'm smart, but because I understand one thing. Price doesn't move because of news. Price moves because of expectations built before it. If expectations are already fully priced in, then what remains is only emotion. Trading against the trend is not fighting logic, it's recognizing what runs opposite to the crowd's emotions. Their point of death is exactly where I find life. I don't need to be right 10 times, I only need to be right once, when the market is at its most chaotic. And in that moment, I place my bet in silence.
People often call those who trade against the trend reckless, rule breakers, gamblers playing a game that's too dangerous. But to me, trading against the trend is the most rational act once you understand that everything has a limit. Even a trend, no matter how strong, cannot pull forever. Look at Bitcoin in 2017. Look at gold in August 2020. Remember WTI oil when prices fell into negative territory. All of them were once called impossible to reverse, and then they changed direction. The last person to enter a trade is always the victim of the very crowd they trusted. Counter-trend trading is not for the impatient. I've waited 2 full days just to place a single trade. Price rose, I stayed out. News was released, I stayed silent. Only when the final participants started to feel euphoric did I press the button. Trading against the trend is not an impulsive act. It is the peak of control. Control over emotion, control over temptation, control over the ego that wants to act so you can wait for what the market needs. There is one concept I want you to carve into memory. The market always has points of emotional compression, moments when the crowd is absolutely convinced a reversal is impossible, when too many people are looking in the same direction, when media, groups, experts, forums all repeat the same narrative. I look for those compression points. I don't rush in. I wait for them to burst. And when they do, I move the other way. Not because I want to fight the market, but because I understand one thing. The market doesn't run on logic, it runs on psychology. And psychology always has limits. Too much belief is when collapse begins. Too much certainty is when reversal strikes. My strategy rests on a familiar paradox. Whales don't buy at the bottom, they create the bottom. Whales don't sell at the top, they build the top. And to do that, they need you. They need traders high on momentum, chasing the trend. They need your money flowing in so they can quietly pull theirs out. They need your absolute faith in the trend so they can exit on the other side. I don't want to be the small fish. I don't want to arrive late. I learned to see the cut before the blood appears. Someone once asked me, "What do you look at to time a counter-trend trade?" My answer was simple. I look at what doesn't happen, not what already has. Good news with no strong move, bad news with no collapse, a breakout with no follow-through. That's when expectation begins to betray the crowd. And for me, that's when the real story begins. Heavy volume, yet price goes nowhere. RSI divergence appears, but almost no one notices. A breakout happens, but there's no follow-through. Those are negative signals, things the market doesn't say out loud, but is quietly warning you about. That's how I spot trend traps. I've watched thousands of traders blow up their accounts because of one sentence: just trade with the trend. I don't deny it. Trend trading works in many phases of the market, but that very success makes people careless, and when the trend ends, they can't get out in time. They don't dare to go against it. Only when the majority has no other option, When there's only one direction left, does counter-trend trading begin to make sense? That's where risk-reward becomes exceptional. That's where I can risk 1 to make 10, lose 20 pips to look for 200. I don't need to be right often. I just need to wait for the right moment and strike once. I know some people hear this and think, that's too hard. I don't have the patience. Then don't trade against the trend, because this strategy is for those cold enough not to be led by emotion. I won't deny it. Counter-trend trading can be one of the most profitable strategies if done correctly. But this must be said clearly. It's also where 95% of traders are sent back to the starting line. Why? Because they don't understand the nature of going against the flow. They think counter-trend trading is simply price goes up, sell, price goes down, buy. Then they get stopped out again and again, and they conclude counter-trend trading is stupid. But the problem isn't the strategy. The problem is them. Most counter-trend traders lose for one main reason. They enter too early. You see price rising non-stop. You think it can't go up forever. You place a sell. What you forget is this. Whales can push price much farther than you can endure before they turn it around, like a tsunami. It doesn't reverse the moment it looks too strong. It only stops after it has swept every weak hand out of the game. The next mistake is trading without clear confirmation. Counter-trend trading is an art. You don't enter on feelings. You don't enter just because price looks too high. You enter because there is evidence, clear signals, a specific reversal pattern, abnormal volume, price reactions that show the market is changing sides. But most people don't wait. They rush. They fear missing out. They trade discipline for hope. And the market never pays for hope. Another reason most traders fail when trading against the trend is they don't know when to stop. Once they sell, they want price to reverse immediately. Once they buy, they cling to the trade until the account is bleeding red. Why? Because they didn't prepare for the opposite scenario. They don't place a stop loss. Or they do, but when price moves against them, they push the stop further away. And that's how a controlled trade turns into a slow execution.
And then I lost. Not because the strategy failed, but because I couldn't accept that I might be wrong. I was there once. I traded against the trend with belief, not probability. I held losing trades until my chest tightened, until sleep disappeared. I kept telling myself it will turn around. But the market didn't turn around. It turned its back. Only when I started cutting losses without hesitation, only when I entered trades solely when the market reacted against expectation, only when I accepted that being wrong is part of the game, that's when I began to survive with this strategy. Counter-trend trading is not for the impatient, not for dreamers, not for beginners, and above all, not for anyone who takes discipline lightly. I know you've heard it before. To win big, you have to take big risks. But the truth is this. You only win big after being wrong many times and extracting the lesson. I share this not to scare you, but so you understand. Counter-trend trading is not a shortcut to wealth. It is a double-edged blade, and only when you have enough strength, enough experience, enough clarity, will that blade not cut your hand. Counter-trend trading is not for everyone. It is a narrow path, full of traps, full of blood, with no clear signposts. But precisely because of that, it is the only road that leads to a level of profit most people never touch. I'm not saying this to exaggerate. I'm saying it because I've survived enough periods of market madness to understand one thing. Everyone knows trading with the trend feels safe. But that very safety is what makes them arrive late, again and again. And sometimes, only those who dare to walk against it truly escape the market's trap. Trading against the trend is not stubbornness, it is not rebellion. It is the act of someone who has walked through fear, passed through euphoria, and chosen to see the market as it is, not as they wish it to be. I've failed many times because of impatience, because of early confidence, because I entered without evidence. And I've also lost by believing absolutely in a trend that looked too clear. Until I learned how to wait, how to observe, and how to step in at the exact moment the market begins to reveal the cracks the crowd is still blind to. There was a time when all it took was a single trade at the right moment and everything flipped. I didn't need to win every day. I didn't need to scalp non-stop. Just one trade placed when others were wrong was enough to change the entire account. That wasn't luck. It was the result of discipline, analysis, and the strength to move through emotion. There is a strange paradox in the market. What feels the clearest is often the most dangerous. What people call a strong trend is nothing more than a carefully built trap designed so those who arrive late believe it will keep going. And then it doesn't. It reverses and crushes that belief with a cold truth. Counter-trend trading, when done right, does more than generate high returns. It pulls you out of the role of the market's victim. You're no longer being dragged along. You begin to see the whole picture. And most importantly, you become the one who acts, not the one who reacts. If you've listened this far, you're probably no longer new. You're not looking for tricks anymore. You're searching for a trading mindset that lets you survive. I'll say this only once. The biggest opportunities are not where everyone is looking. They are where you dare to step when no one else will. And they belong only to those cold enough not to be swept away by the wave. If you want to continue down this path, if you want to hear real experiences, deeper observations you won't find in books, stay. Subscribe to the channel. Leave a comment. Because I don't tell you what the market has already said. I tell you what it's hiding. And some things are only meant for those strong enough to recognize them. We'll meet again when you're ready to see the market through a different lens.